So I've got a set of circumstances where I'm just doing a consult, and it's related to a business that is trying to determine if who they've been paying as independent contractors, should they pay them as employees. Now, we're in a set of circumstances where we've got $1 million being reported on 1099 NEC going out to individuals. So there's a lot of exposure here to start with. So the first thing I told them is that here's what we're risking by getting it wrong. If you take that $1 million, and if they were all employees, the IRS really easily would say, well, Social Security and Medicare should have been withheld. It wasn't. So you owe that. And Social Security and Medicare was to be matched. You didn't, so you owe that. That's a 15.3% amount, right? So yes, there's limits in this, and this, but easy math, $150,000. But if you'll just triple that, that's what they would owe. That's what they're risking in this decision, about $450,000. How?
JJ, the CPA is here.
JJ, the CPA here. Hope you're doing well. So this $450,000, how do we get to that number, and how quick did it go up? Holy smokes. Well, I told you the math on the 15%, but with this, there's a trust fund penalty. It's 100% penalty. So $150,000 of tax due, boom, the penalty is $150,000. Now we're at $300,000. You have material understatement, there's a 25% penalty. You have late payment penalty, underpayment penalty, there's another 5 and another 5%. Now you have interest on top of that. Now you have penalties for not properly filing W-2s, didn't file them timely, late file penalties on the W-2, incorrectly filing on a Form 1099. Presto, basically what is 15.3% of whatever you're paying independent contractors? Take that amount times 3, and that is the exposure. And so what I tell them is your exposure is $450,000. But how would you get around this? Well, by making them employees. And I get that business owners go, well, but that's going to cost me more. But I want you to hear one thing. The cost of having an employee at its basic amount is 7.65% on top of what you're paying them in wages. Yes, there are minor little things on top of that. So what I might tell a client is round it to 8%. You have a retirement plan, maybe round it to 10%, 11%. All I'm saying is whatever that percentage is, it is way less than the exposure that you have by treating somebody improperly as an independent contractor. So you pay out $10,000 to an independent contractor. What is your exposure? $4,500. 10,000 times 15%, multiply it by 3, easy math, you owe $4,500. If you paid that independent contractor instead, and if required properly as an employee, on the taxes that are Social Security and Medicare, the match, 7.65%, rounded up, a few other expenses, maybe it's 10% with employer match on retirement. Well, now that $10,000, yes, it did cost you another $1,000, but easy math, $1,000 is way less than $4,500. Look at that, so high it's going out of the screen. So how do you make sure you're doing these things correctly? Boop, ADP, call my team. All right, hey, thanks for tuning in. Love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.
American CPA.